What's up, traders? Matt from the Trade Brigade here doing a technical analysis on SPY the Qs and IWM. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, on the daily, you can clearly see a nasty inverted hammer here, indicating that there was an attempt from the buyers to take it back higher, but immediately slapped back down to the lows of the day's session, and that's where we've closed, right? But more importantly about this candlestick, look at the location, right? Where's that upper wick? It's right at the back test of the bottom end of our balance from in here. So very technically well-respected level right there, just to me indicating that short-term traders are definitely paying attention to this. And in my estimation, here's the reasoning for this move higher, right? Remember what I was talking about in yesterday's video. Here's your opening range. Shorts late to the party cover. They get squeezed out of the position. Then the more tactful shorts enter at the back test of the breakdown of the range. Isn't that not exactly what I talked about in yesterday's video? So to me, that's perfectly logical why this move unfolded here. Now going forward, what are we going to do about it, of course? Well, from the daily, it's nothing more than a break retest. And again, that might look something like this on the 30-minute, sort of setting up an H pattern with your lower high. I would watch for any lower highs underneath the one we've already produced into the afternoon here, 423 roughly. So anything that does this, an equal low reattempt, forms a descending triangle. Once we have 3 touches, look for the flush, right? And we're obviously going to target the Thursday panic low from the invasion day 2 weeks ago at 410.65. So that's the downside move here inside of the S&P 500s. Any lower highs underneath 423, again, look for the flush to develop roughly around 416. If it's going to turn around to the upside, I would not be confident in longs until we can recapture 429. If we can get back above that for some unknown reason, fine, start to look for more valid long setups. But if we're chopping around in here, just look for day trades only. I know it's a big range. I know there's a lot of deltas to be picked up in there, but there's really nothing about this price action here that would indicate clean and smooth sailing if we break a level or move from here to there. There's no pattern going on here. There's nothing on the 30-minute time frame that would even remotely suggest, oh, there's a breakout level here, or if we recapture this, we might move higher, right? There's nothing going on here in this section of the chart where we can say, okay, I can see a long setup unfolding. So to me, careful with longs in here. Day trades only. If you see a 5-minute, 2-minute bull flag forming, you believe in the momentum, you think shorts are going to cover. I'm not faulting you for taking those setups, but just know there's not a whole lot of structure to lean on for longs in this general area. That's the gist of our S&P 500 chart. Let's move along now. Talk about the QQQ for the NASDAQ 100 and our tech sectors. Zooming in on this one, you'll notice the daily chart is very similar. It's relatively weak, much closer to the invasion day lows. Also, our high here is nowhere close to the back test of the breakdown of the range. We know that last Friday it already forecasted the move lower. Then from here, follow through on the Monday session, and nothing about the chart is bullish, right? If we take a look though, zoom in here on the 30, you'll notice that this backtest area is, we did fall short of it, no doubt about it, but that's kind of your break and retest, which is going on here. Notice that we're a little bit higher off the lows as opposed to the S&P 500. So this one does have some room to set up continuation to the downside, then a bounce off of today's low, and then we'll determine, okay, are we going to get the lower high? Then we turn this into a flush point on a third touch, or are we going to get a more sizable bounce? And if this turns into a double bottom, your neckline break, just like sort of in the SPY, is up and over today's high, up and over this balance area low here to get into the resistance trend line, okay? So that's what we have if it's going to turn around. That's what we have if it's going to move lower. Again, it would do something like this, bounce off today's lows, lower high, equal low, then look for follow through to the downside, obviously making the move completely into the invasion day lows at 318.20. After that, we do have a gap to fill on the QQQ chart between 315.80 and 314.80. We're just rounding there. It's about $1. And then after that, we have 309, okay, coming from the low end of this consolidation way back in here on the left. So that's the downside targets on the QQQ. We know it's relatively weak. If we do start cracking the invasion day low there, I do imagine that the trend just continues. And again, the trend being from the daily perspective, highs, lower highs, lower highs, lower highs, lows, lower lows. Are we going to put in this low and then make a new lower low? Looks likely to me based on all of the things that we've been seeing so far in our broad market. Again, if we're going to be looking for longs, more confident longs, it's got to be up and over today's high or back above the flush point from here, 335.25. Next and lastly, IWM. Oops, we want just IWM. For our Russell 2000 and small caps, what's going on in this name? Notice that we did not make the move even close to the Thursday panic invasion day lows. Notice also that we are still inside of the prior day's range, Monday's range. And notice that your upper wick is coming into, sure, a horizontal area, but it's not the breakdown point, right? The breakdown point of this range would have been here at the 197. Notice that IWM actually poked back above. So there was potential that this could have turned into inverted head and shoulders. It certainly didn't. Again, closed relatively weak at the lows, but all I'm getting at is here is the relative strength actually inside of small caps, which I find quite interesting, right? Generally, small caps are going to be the leading indicator. They're going to be the first to break down and the first to start to recover. So the fact that they're so middled right here is kind of, I'm not saying it's throwing a wrench in the analysis, but it's an interesting nuance to at least pay attention to. In terms of what's going on the daily, sure, don't get me wrong, we do have that nasty inverted hammer, but now we have 2-day flush point in play. If we crack today's low and yesterday's low, because they're essentially the same at 194, 193.75, 193.50, what's the level? Let me just be exact here. 193.55 is the number. If that breaks, certainly could open the door for the Thursday invasion day low here. That's 187.72. Breaking 2-day lows, you could essentially just look at this as 2 days of consolidation, right? We made no progress in one direction or another, day down, day up, day back lower. So if that breaks, I imagine there is some energy. Also think of this as overhead supply now confirming, right? If that breaks, there's your target. But from the daily time frame perspective, what else do we have? What else do we know about ranges, right? Whenever we're in the midpoint of a range, generally speaking, this really isn't where your edge exists. Your edge exists here, and I know you're probably sick of me saying this, for mean reversion or breakout, and the same thing here for mean reversion or breakdown. In the midpoint, kind of a 50-50 shot. And again, noting the sort of interesting relative strength here, ironically, in small caps, I don't know about this, okay? So to me, I would need confirmation that this level is going to break the 2-day lows, and by confirmation, I mean something that produces a lower high, equal low, lower high, whatever, something that breaks it, and then once that breaks, like this, I want to see a back test and roll over there. So shorts then go here, looking for that target there, instead of just chasing it at the midpoint of the range, because it could easily do something like that, right? And it could make its way back into this chop, and then you get sort of, grinding around in here, holding puts. If it goes sideways, it's not going to be a good thing for your position if you're using options, right? So IWM, more of a patience play in the midpoint of the range. I would want to see confirmation if it's short. For longs, there's potential that this comes back into play here. Let me put that level on the chart. Let's grab our other tool and try that one more time. Oops, we don't want text. We're all over the place with the mouse today. Bear with me. Here we go. There's your highs at 199.50. That gets taken out. Maybe there's a move to the upside here, roughly 204, coming from the top end of the range right there. So those are my thoughts on IWM or broad market as a whole. Generally speaking, QQQ, the weakest of them all. The SPY has more of a tradable setup to the downside, noting that we're still a little ways off of the Thursday invasion lows, and IWM, the most neutral of them all. Best relative strength, midpoint of the range. So that's what I've got for you. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.